Imagine trying to withdraw your money from your bank account or from your MMF account, but there is a withdrawal limit that you can't withdraw 300,000, you can only withdraw 200,000. This is what happened to Argentina when they defaulted on their loans. Today we are going to explore a possible scenario that what if the government was to default on its debts? How would that look like for you as an investor who has your money in the stock market, who has your money in special funds, who has invested in government treasury bonds and treasury bills, who has money in fixed income funds? We are also going to compare that to what happened to Ghana, because Ghana defaulted in their external and domestic debts. But first, we need to understand how much money does the government owe and who has lent out this money to the government. Kenya has a total debt of around 11.02 trillion. This data is as of 2024, so it's probably more. And out of this amount, around half of it, more than half of it, that is 5.9 trillion, is domestic debt. Domestic debt involves government bonds and treasury bills. Then we have 5.12 trillion is foreign debt. So here we're talking about euro bonds, owing money to the International Monetary Fund, owing money to China because they helped us construct the SGR and we owe them money. For domestic debt, that is government bonds, treasury bills, you can see that the largest shareholders are banking institutions. The share is around 45.5%. You can see that pension funds, so we're talking about NSSF and also money from money in private pension schemes is also here. And we have other domestic investors. So here we're talking about you and me who own government bonds. You've bought a bond individually, and also asset management firms. So think about investment firms like Etika, think about investment firms like Genghis Capital. We have insurance companies. So think of Jubilee, Madison, and we also have parastatals that also have another share here. It's important that we understand this because any change, any default is going to affect all these institutions and the effects are going to trickle down to us. For example, if the government was to default on its bonds, if they were to say, we are unable to pay, the first impact would be panic. Everybody would want to withdraw their money. I don't know if you remember this, but earlier on this year, there was this rumor that was going around that banks were going to collapse. And there was this narrative that was going on that withdraw your money. It's the same thing. You would want to withdraw money from your banking institution. You would want to withdraw money from your pension scheme. You would want to withdraw your money from that special fund, from that fixed income fund. At the end of the day, all this money eventually finds its way to your bank account, if not your M-Pesa account. But even money that is in M-Pesa is in a bank somewhere. If everybody wants to withdraw their money, and the point of connection here is the bank. But remember, banks have your money in bonds. Part of your money is in bonds. So banks are not fully liquid. They just can't allow all the money to flow out of the banks. So this is when the government would come in, the government would chip in, and they would say there are going to be restrictions in terms of the amount of money that you can withdraw so that the banking system doesn't collapse. And this might cause social unrest. The other impact would be on foreign investors, that they can foresee the tough economic times that are coming and they would want to offload the assets that they have. They have assets in form of real estate, so they're going to sell their properties in Kilimani, in Kilifi, they're going to sell their properties in Kileleshwa so that they can have their money and leave. They would want to sell their stocks. We have foreign stock investors who have bought shares at Safaricom, who have bought shares at Equity Bank, who have bought shares at Stanbic, and they would be willing to lose right now so that they can leave and they can direct their investments elsewhere. Go to another stock exchange market, buy real estate in Uganda or in Tanzania and in other markets. If foreign investors are selling their assets, they're selling their stocks, they would want to convert their money to USD so that they leave the country, right? This would then affect the exchange rate. The value of the Kenyan shilling right now is 126. That is $1 goes for around, actually it's 129. $1 goes for around 129 shillings. The value of the Kenyan shilling would go down to even 160, to even 170, to even 180. We don't know. This actually happened last year where there was this anticipation that the government of Kenya was going to default on the Feb. No, actually, it was a Eurobond that was going to mature in June 2024. What happened is that investors sold off their assets and they left Kenya. Well, most of them left Kenya. But when they left, they took out the USD, so we had less USD in the market. That's why the value of the Kenyan shilling went down to as low as 162 shillings. That was last year. And once we paid off our Eurobond, we actually paid it earlier than June, the value of the Kenyan shilling started to go up, and until now, it has been stabilized to around 129 shillings. So this is what we're talking about, that it would affect the exchange rate. And an exchange rate is very important because if the value of our Kenyan shilling would go down, it would mean that it would be expensive to import products, especially important items, essential items. Think about medicine, think about wheat, and even sometimes we import maize and all these other food items and machinery. Think about that, because if one USD was to go for, let's say, 160 shillings, then me as Ivy, who is importing machinery, who is importing medicine, it would become more expensive for me as an importer to import these items, because now I have to use more Kenyan shillings to equate the USD that I need to pay for these items. Now it's going to affect businesses, especially businesses that import items, businesses that import those wigs, phones, laptops. Talking of businesses, many businesses lose out on revenue not because they lack customers, but because they lack a proper system to manage the entire sales pipeline. That's why I'm introducing Odoo. Odoo is an all-in-one business solution that streamlines your business processes, be it accounting, be it HR, be it inventory, you name it. The Odoo sales app brings all your sales activities under one roof, from tracking all your quotations and sales orders that your customers requested, to analyzing your sales reports for the month, and to even reviewing the paid and unpaid invoices so that you can make follow-ups and close your sales faster. Other than the Odoo sales app, Odoo has other applications for accounting, project management, marketing, customer relationship management, and even building your website. All apps are fully integrated to keep your business connected in one place, in one dashboard. If you're only interested in one app, it's entirely free. For example, if you only need the sales app to track your sales, it's free. But if you want to access all apps, you have to upgrade at a cost of $7.25 per month. Personally, I view Odoo as that one business partner who works behind the scenes to keep all things efficient and organized. If you're ready to simplify and scale your business, try Odoo today. I've dropped the link in the description. This is exactly what happened to Ghana, that one, the value of their currency depreciated, and two, there was inflation. In as much as there was inflation before the government defaulted, and it was one of the signs that they were not doing well economically speaking, and this is to be expected. We can't run away from this in case this was to be the scenario. The other possibility would be to increase taxes. Now, there are two angles to this. One is that the government would want to raise more revenue, right? The reason why the government takes on debt is because the revenue that it collects in form of taxation is not enough. So that's why they issue bonds, they borrow money from the IMF for development projects. The other angle to that, which I think is more pronounced or might be more pronounced, is that whoever is going to assist us to rescue our economy might be the one who holds the power to increase our taxes. For example, for Ghana, the International Monetary Fund came to their rescue. They gave them around 3 billion so that they can revamp the economy, in as much as it's not enough, but it's something. For Kenya, it might be these international institutions, these multilateral institutions like IMF and the World Bank that might want to assist us. And remember, the government would find it hard to raise more revenue from banks. Remember, it's the banks who are giving them money, and now our money is not in banks, and also from individuals, because now we don't trust the government, that they find it hard to raise money from their own citizens. They might want to go internationally, and these institutions might be the ones that might impose these taxes. Let me just give you a possible scenario. Last year, when we went to the streets to reject the finance bill, it's because of the taxes that were there, the taxes that were being proposed on basic essential items. But where did these tax proposals come from? From the IMF. That's just a possibility that whoever is going to rescue us might want to impose the same taxes that we rejected because they have to recover their money. Look at pension funds. Look at insurance companies that have money in government bonds. There's going to be delayed cash flow. For example, for the insurance companies, they might find it difficult to meet the claims that they have. Think about the health insurance claims. Think about the vehicle insurance claims whenever there's an accident. Or think about life insurance in general, that there are certain obligations that have to be met, and part of this money is in bonds, so they can't be met on time. Let's look at the bigger picture. Let's talk about unemployment, because that is another scenario that will definitely be there. Think about all these firms. Think about pension firms. Think about insurance firms. Think about banks that have employees. At one point in time, they might want to lay off some employees. And even businesses, if a business that was importing cameras is now charging a camera at 150,000 instead of the 100K, now they have less customers, they would want to lay off some workers. Ghana defaulted their debts back in December 2022. So some of the measures that they took was that, one, if you were a domestic bond holder and your bond was going for, let's say, 10 years, it was extended to 20 years. If your bond was giving you, let's say, 12% return, it would then be slashed to around 8% or 6%. That is for the domestic bond holders. For the international bond holders, they received a haircut of 37%. In fact, for them to even come to an agreement with these international bond holders, it took some time. It took some time from December 2022, and that decision was arrived at late last year. But one thing that comes to mind is that if all these measures are being put in place or might be put in place to recover the economy, then why would we want to put ourselves in that shoe? Why would we want to not prevent the situation so that we don't have to struggle to find the cure? Because honestly, recovering an economy is a task. It might be even harder than just recovering the economy right now. What do you think are some of the necessary steps that the Kenyan government should take so that we don't find ourselves there? Let's continue this conversation in the comments.